Inflation just dropped to 2.7%. Markets are cheering. People are getting excited. But slow down, because this number might not be telling the full story. Let's get into it.
Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video.
Hey YouTube, Julian here, and first of all, wishing you all a blessed Christmas and a Happy New Year.
Merry Christmas, everybody!
In the recent CPI report, inflation rate came in at about 2.7%. This caused the tech-heavy Nasdaq Composite to rise about 2.8% and the S&P 500 going up roughly about 1.4% on Friday. And this surprised a lot of people because just a few months ago, inflation was actually getting higher. The September inflation report was 3% and in August, it was 2.9%. So on the surface, this result looks great. Inflation seems to be going down, right?
Hold up. Wait a minute. Something ain't right.
Well, not quite. Here's where things get a little bit tricky. Now, if you recall, the government was on shutdown for about 43 days. During that time, the Bureau of Labor Statistics could not collect all the data that they normally do. And some of these inflation numbers are actually just estimates. It is kind of like checking your bank balance when a few transactions are missing. So you're not actually getting the data that you're supposed to. So how do you know then if the data is right? Because of that, a lot of economists are saying, take this number with a pinch of salt, because once the full data collection comes back online and when we get a clearer picture of prices, inflation could actually accelerate in December. And remember, the December inflation gets reported only next month in January 2026. So let's see what happens then. Now, if the December inflation comes in hotter, here's what I expect. Number one, rate cuts expectation might get pushed back. So this is going to be the immediate reaction. Currently, traders are expecting the Federal Reserve to cut rates early, maybe in March, May, or even June. So stocks, bonds, and yields are priced around that idea. Now, when inflation comes in hotter, those early cuts no longer look realistic. So markets remove that expectation. And right now, the Federal Reserve is only signaling one rate cut in all of 2026. This is when Jerome Powell is still in charge. So let's see what happens then. He might get removed. The expectations may change. We'll see what happens. Now, number two, I expect that bond yields may also move higher. Bond reacts before stocks just because they react to interest rates first. When the yields move higher, borrowing tends to get more expensive. And when borrowing gets more expensive, people tend to take less risk. And when people take less risk, stocks struggle to trend higher, which leads us to number three. Stocks get choppy. Now, this is not a crash that I'm expecting, but I'm just saying that there might be tougher conditions with more volatilities in the markets ahead. So now that we know all this, we understand the macro risk, I want to actually jump into the charts to see what's happening for this week. Now let's take a look at SPY right here. As you can see, SPY dropped down after the latest FOMC reports, just as I mentioned last week, because of the tech crash that was actually happening. So right now, what's happening is that S&P 500 was actually kind of playing sideways for the last few days up until the inflation report, whereby it actually pushed the S&P 500 up a little bit. Now, we are expecting that S&P 500 will move to this next resistance before deciding on if it wants to continue its way up or respect it and continue back down into the resistance again. Next, this is Apple, and as you can see, Apple has been playing sideways as well for some time right now after a retracement. So right now, let's see what is Apple intending to do. If it wants to go up, it has to break above this level right here to continue its way up. If it doesn't, it's just going to play sideways until another breakout happens. So I'm curious to see what will come out of Apple really soon. Same thing here with Google. You can see Google also had a retracement after the last FOMC meeting and after the spike up. Right now, Google is kind of playing sideways along this. So let's see what is going to happen with Google. If it wants to go up, it has to break above this level of resistance to continue its way higher. If it doesn't, then it might just come back down and still continue moving sideways. Microsoft also looks like it's going sideways, and it has been doing that since end of November. So right now I want to see Microsoft trying to go back to this level of resistance and trying to break this level of resistance to continue its way higher. If it doesn't, it's likely going to continue moving sideways again, just like the other stocks. Tesla, on the other hand, had a nice breakout last week, and it was moving sideways throughout this level right here. If it wants to go higher, it needs to break the all-time high that Tesla is at right now to continue moving higher. If not, it will just continue playing sideways again, as just like the other stocks. Same thing here with Amazon. Amazon playing sideways around this level right here. If you want to go higher, it needs to break above this 230 level and push up even higher. If it doesn't, it's just going to continue moving sideways again. Nvidia, one of the major market movers, Nvidia has actually been playing sideways as well. Recently, it looked like it wanted to break below this support. However, after the CPI inflation report, it actually pushed it up, so it's now back at this resistance. Let's see if it's able to continue the movement outwards. If it does, we will likely see that Nvidia will be able to push up to this next resistance, but if it doesn't, then Nvidia is going to come back to the support right here. Next, let's look at Meta. As you can see, Meta is in a very interesting position because of this area right here. Tried to break above, but very quickly the sellers shut down the idea, pushed it down. This was actually the week before, and since then it has been kind of slowly moving upwards back into this level of resistance right here. So right now I want to see if Meta wants to continue to move up, it needs to break above this to continue back to this level of resistance. If it doesn't, it's likely going to come back down to this level of support right here. And last but not least, Palante also has been having a pretty good time. Right here, it seems like it has broken above this level of resistance. So I would like to see Palante continue that bullish momentum going up to this next level of resistance, which is also one of the all-time highs. If it's able to do that, then we can see likely Palante is able to go up even higher, but if it doesn't, if it respects this level of resistance, we can see it playing sideways back again. Next, let's look at gold and see what's happening to gold this week. So right here, this week also ended up bullish for gold. As you can see, this was the previous week breaking above this previous high, and this week it actually also continued that momentum going up higher. And for gold to kind of move up next, it has to break the final level of resistance, where if you can see on the H4 chart, you can see this area here that I marked out is the final level of resistance, basically the all-time high for gold before it continues up higher. And right here, gold did actually attempt to break this level of resistance, that all-time high. However, market quickly rejected it, causing it to go back down. This was on Thursday, I believe, after the CPI report. So what happens right now is that it needs to try to attempt to push up higher again, which I do believe this is very much possible in the coming week. So I look forward to seeing that. So my bias for gold is still bullish for now based on what I see in the technical analysis data. And I do expect that gold will want to try to push up against this level of resistance again, and if it's able to break above this level of resistance, we can see new all-time highs being formed. On the other hand, let's take a look at Bitcoin. Bitcoin has been playing sideways for a very long time. You can see 1, 2, 3, 4 weeks. Right now it's moving, actually 5 weeks, moving sideways along this level of support and resistance. So right now it is still very uncertain on what's happening to Bitcoin. Bitcoin really needs a big push if he wants to continue his way up. Seems like even though Michael Saylor actually injected $1 billion somewhere around here, and just last week he also injected $1 billion again, still did not move Bitcoin up much. So for those of you who are bullish on Bitcoin, you want to pay attention, take note that this level here at the 85,000 to 80,000, it doesn't break, because if it does break, then we can expect to see Bitcoin fall down into quite a deep level, right? So just take note of that if you guys are in Bitcoin. I always say that if you are invested in Bitcoin, it should be for the long-term gain. Don't look at it as a short-term play, because most often than not, right, those short-term players will always get burnt out because of the volatility can happen to Bitcoin. So with that said, this wraps up our market outlook for this week, and I hope that this has been helpful for you guys. And if it does give you guys some insight, help me out by subscribing and liking. And if you guys also want me to select any company to do a review on, to do an analysis on, just comment down below. With that said, I want to also say we are expecting quantitative easing to happen right now. It is actually in the process of happening right now already. And if you're curious to know what is quantitative easing, and if you want to dive deeper, just watch this video right around here. And I look forward to seeing you guys in the next video. Bye bye.